The AI era is here, and it's demanding networks unlike anything we've seen before. Today, we're diving deep into Ciena Corporation. They're really at the heart of this shift. We'll unpack their latest results, fiscal Q3 2025, and see what they're projecting.
That's right. It's not just about the numbers, though. We're looking at how Ciena is actually positioning itself for this global AI infrastructure build-out. Their latest financial sprint, sure, but also their, well, pretty bold projections.
Okay, let's jump right in then. Ciena just reported some, frankly, stellar numbers for Q3 2025. This ended August 2nd. And the market noticed, big time. Stocks surged, over 23% in pre-market?
Yeah, that tells you something.
They hit $1.22 billion in revenue. That's a remarkable jump, nearly 30% year over year from $942.3 million. And get this, it actually beat analyst forecasts. They were expecting maybe $1.17 billion. Ciena came in over 4% higher.
Right. And what's really fascinating, I think, isn't just that top-line growth, impressive as it is. It's the underlying profitability improvements. That points to really strong operational execution, a healthier business overall.
How so? What metrics show that?
Well, look at the adjusted operating margin. It climbed significantly, 10.7% for the quarter. That's up from 8.0% last year.
Okay.
And adjusted EBITDA, that's a key measure of operational cash flow, saw a huge increase too, over 60% year over year, giving it $158.0 million.
That profitability really pops when you see the adjusted earnings per share, too. It was $0.67. That's a massive 91% increase from $0.35 last year. And again, it just blew past the forecast. Analysts expected $0.53. This was over 26% better. So, yeah, strong revenue, strong earnings. Market clearly loved it.
And beyond those headlines, the cash generation was really solid. The company generated $174.3 million in cash from operations.
Which is a big swing, right? Weren't they negative last year?
Exactly. A significant positive shift. It shows the growth is turning into actual, tangible cash. Plus, they showed commitment to shareholders. They bought back about 1.8 million shares.
Yeah.
Spent $81.8 million doing it. So it all points to a company that's not just growing, but doing it well, efficiently, and responsibly.
Okay, so these Q3 numbers are undeniably stellar. Paints a very clear picture of success right now. But, in this AI landscape, things move so fast. Future potential is key. So let's look into Ciena's crystal ball. Their guidance for Q4, and maybe more telling, that early look at fiscal 2026.
Right, and this really raises the question, how confident are they? Is this momentum sustainable? Their Q4 2025 outlook gives some clear targets. Revenue expected between $1.24 billion and $1.32 billion.
Okay, so continued growth there. What about margins?
Adjusted gross margin projected between 42% and 43%. And management was pretty explicit here. They said Q2 was the floor for gross margins. They expect improving trends over the next several quarters.
And spending.
Adjusted operating expense forecast in a range of $390 million to $400 million. So seems contained.
Okay, Q4 looks solid. But you mentioned that early glimpse into fiscal 2026. That sounds like where it gets really interesting.
It really does. They're anticipating approximately 17% year-over-year revenue growth for fiscal 2026.
Wow, 17% again. That's similar to what they expect for fiscal 25, isn't it?
Exactly. And what's really significant is it means they expect to hit the high end of their 3-year revenue CRGR target a full year early.
That is a massive acceleration.
It's definitely a bold statement. Signals huge. Well, that high level of confidence, it seems to stem from a really robust backlog and just incredibly strong market demand they're seeing. Ciena's CEO, Gary Smith, was very clear. He said the network is now, quote, fundamental to underpinning AI's growth and, crucially, its monetization. He genuinely seems to believe we're just in the early stage of a multi-year, highly durable network investment era, like a fundamental shift in their opportunity. You have to invest in moving the data first.
Okay, let's dive deeper into why then. Why this accelerated demand? What strategic moves are really driving this? Because it really does feel like the AI revolution is hitting their business directly. They're positioning themselves as the global leader in high-speed connectivity for AI, building adaptive networks, they call them. And they made that point, didn't they? That without robust networks, all these huge AI investments, LLMs, GPUs could be, quote, stranded?
It's such a critical point. It's like building a supercomputer, but connecting it with, dial-up. It just gets bottlenecked. Ciena's message is, the network isn't an afterthought. It's the foundation for AI to even work, let alone scale up. Their tech is basically essential for moving these massive, constant torrents of data that AI needs for training, for inference, for everything.
And they've backed this up with some really significant wins, haven't they? Real-world examples, like that industry-first win, a North American project connecting distributed GPU clusters for AI training.
Yes, that's a huge deal. It involved their RLS platform that's routing and switching, and their WaveLogic 6 Nano 800 gig ZR plug.
Okay, break that down a bit. The WaveLogic 6 Nano ZR plug. What makes
Okay.
that special?
So think of it as their latest miniaturized, super powerful optical engine, a data transmitter. It's what lets them push huge amounts of AI data over long distances really fast, but in a small, power-efficient package. Plugs right into standard gear. That gives them a big edge in building these, well, AI superhighways, especially for linking those distributed GPU brains. And the money's already flowing from that win, expected to ramp to hundreds of millions of dollars soon.
Wow. And then there was that DTOM solution they co-developed, Data Center Out-of-Band Network Management. What does out-of-band mean here, and why is that a big deal for hyperscalers?
Right. Out-of-band basically means a separate, dedicated network just for managing the data center gear itself. It's not using the main network that carries user data. Think of it like a service lane next to the main highway.
Okay, got it. So maintenance doesn't disrupt traffic.
Exactly. This DCOM solution streamlines installing and managing these huge operations. Better scalability, less power, less space needed. And again, that's another hundreds of millions opportunity just with that one initial customer. But they think others will adopt it too. Shows how closely they're working with these hyperscalers on custom solutions.
And it's not just these big specific projects. Their interconnects revenue is exploding too, right? That's selling the optical tech itself, like plugs or components.
Yeah, to other equipment makers or directly to hyperscalers for their own builds. That segment's set to at least double this year, fiscal 25. And they're projecting it doubles or more again in fiscal 26.
It's incredible growth.
And another big hyperscaler just placed its first large order for their 400 ZR Plus pluggables. Made Ciena the lead supplier for that tech with that specific customer. So broad adoption.
Right, it shows their core tech is getting everywhere, not just in their own boxes.
Exactly. Providing the fundamental building blocks for speed.
What about this new group they mentioned, the neoscalers? That sounds interesting. Who are they and why are they a distinct market?
Yeah, neoscalers. It's a cool term. Basically, think beyond the absolute top tier, the Googles and Amazons. This is a fast-growing next tier. Specialized AI compute companies, smaller cloud and edge providers, some data center operators, they're growing like crazy and need that hyperscaler-grade network now, but maybe on a slightly different scale. Ciena's capturing this middle tier, expanding their market, adds, more durability to the demand by diversifying who's buying.
And the numbers show this breadth. Non-telco was 53% of revenue in Q3. A direct cloud provider revenue grew, 94% year over year, now 40% of total revenue.
Just massive growth there.
International looked strong too. EMEA up 38%, APAC up 24%. Even the traditional service providers, the telcos, are showing steady and sustainable investment. Driven by things like MOFN and needing AI at the edge, apparently 3 of their top 5 customers in Q3 were still service providers. So it really is broad.
And none of this growth is accidental. It's built on, technology leadership and some pretty bold portfolio choices. They believe they have a significant 18 to 24-month lead with WaveLogic 6 and RLS. Their WaveLogic 6 Nano pluggables just had their first revenue quarter, so brand new tech hitting the market. WaveLogic 6E is ramping fast too. Added 11 new customers just last quarter. And they see themselves as the most vertically integrated supplier for optical modems, gives them capability and flexibility.
Okay, but to fuel that growth, they're making some sharp turns in R&D, right? Shifting focus away from residential broadband access, specifically higher capacity PUN like 25 gig and 100 gig.
Yes, they're limiting future investments there, prioritizing coherent optical systems, interconnects, coherent routing, solutions like DSOM instead.
Which makes sense, focusing resources. But does that leave a gap? Are they potentially ceding ground in PON long term?
It's a calculated risk, definitely. They're doubling down where the growth is highest, fastest, and most profitable right now, AI and data centers. They're essentially accepting they might not capture every PON dollar down the road, but they're freeing up critical R&D money for areas where they feel they have a stronger lead and, frankly, where the demand signal is just deafening. This shift does come with costs, though. A non-cash charge, about $90 million in Q4, for that in-process R&D, and also a workforce reduction, 4% to 5%. That means about a $20 million restructuring expense in Q4 too. So tough choices, but aligned with getting those accelerated margin goals.
It all ties into that gross margin strategy the new CFO, Mark Graff, talked about. Designing for long life, reducing costs, supply chain optimization, getting fair value.
Yeah.
How significant is that kind of structured approach for them?
Oh, it's fundamental. In a hardware business like this, gross margin is just critical. A structured approach ensures that market leadership actually translates into sustained profit. Their tech lead, plus maybe a better industry structure with such high demand, gives them more pricing power. It lets them realistically aim for those mid-40s gross margins over time. It's strategic, not just a quick push. They also got a little help in Q3 from better clarity on tariffs, which boosted margins a bit.
And the final piece, scaling up. Can they actually build enough stuff fast enough? They said they've invested significantly across the supply chain. Are they confident they can meet this demand surge?
They acknowledge challenges still exist, certain components industry-wide, but they argue their investments have been key to enabling that 30% growth they just posted. And importantly, they expect these investments will keep scaling capacity into 2026. Might even reduce lead times as new capacity comes online. That robust backlog gives them visibility to plan for it.
So wrapping this up, what's the big takeaway from this deep dive into Ciena? It feels like they're not just riding the AI wave, they're actively uh, shaping the infrastructure, making strategic bets.
I think that's right. If you connect it to the bigger picture, they're putting themselves right at the nexus of the AI revolution,
Mhm.
really hammering home that high-speed optical networks are indispensable. They're shifts. They're really bold guidance for Q4 25 and especially fiscal 26. It shows a belief in a long, durable investment cycle driven by AI and just the fundamental need to move data. They really do seem convinced they're the start of that multi-year, highly durable network investment era.
Exactly. And as AI keeps redefining everything, it really raises a question for you, our listener. How is your industry's growing reliance on data and connectivity going to reshape its own infrastructure investments? Definitely something to think about as the digital world shifts faster and faster from electrons to photons.